Good morning, it's Jonathan Barrett with the morning debrief. It's the 13th of May, the current time is 7:57. Just a little bit late this morning due to the concerns we had on the Harbour Bridge. I had to go the long way around this morning, which was quite interesting, but just took a little bit longer than usual, so apologies for the delay. Okay, last night the Dow was up a little bit, which was good. Just quite a volatile session, particularly when Europe was sort of quite negative, but it did manage to close up. Just some pointing data in terms of retail sales in the States, and also producer prices weren't all that rosy. In fact, it's suggesting that inflation is obviously here to stay. That does appear to be the catch cry across the globe at the moment. We had those positive numbers or positive inflation numbers out of China, Germany and Poland, and that's all indicating that it is just a little bit of concern. Also in Australia we had those unemployment rate numbers which weren't that positive as well yesterday. Of course, a lot of volatility, but let's see how it all unfolds. I guess just a quick wrap. Dow we know was up 65, S&P was up 6, the Nasdaq was up 17. All closer to home, or not close to home, but over in Europe, we did see quite a bit of a mix there, and that to me is quite interesting. FTSE, Euro top 50 was down 25, the FTSE was down 31, the CAC was down 34, the DAX was down 51. Local market managed to pick up a little bit of strength on the back of positiveness in the US, and the SPY was up 26 points at 4,714. So that itself, I think, quite positive indeed. Let's see how we go in terms of how that market trades today. I guess in my mind, the most volatility we really did get to see, I guess, was in the commodity sector and also the US dollar. And let's just have a quick look. The dollar index is at 75.33, and there's that initial movement up here which I liked, but this does look like this move is completed for the time being, so we see a little bit of a correction, I think, for that US dollar lower before trying to angle a little bit higher. As I said before, I think that change in attitude towards the Fed, towards the US dollar, I think could be quite interesting. Okay, that's the dollar index, the Aussie dollar, big bounce there. I think we've got a bit of a low here in place for it. I'm looking for opportunity back down to 106. Let's see what happens there. Certainly, we still see on the daily charts that the Aussie is trying to find a little bit of a base down there somewhere. And but when you look at the dizzy heights it's on at the moment, it always remains a little bit of a concern for me. Dollar yen, the trade we're in, it's been exceptionally frustrating, I think, trading this market. Stochastics are looking quite positive. We have got a long position there, and as you can see, I'm getting ready for a bit of a movement to the top side. It's certainly an emotional trade, I guess, at the moment because it's taking so long. Anyway, let's see how that unfolds. That's dollar yen. Let's have a look at some of the commodities. Gold, huge move down to that 1480, and I sort of took on a very short position and very close last night, and I'm actually glad we did. Jumped out of it just before we went into the States, so that was a quick little trade. Certainly helped the position. But I'm not long and failed to get long down to that 1485 area. So I think when you actually look at it and you look at the daily, perhaps we are trying to find a base down this area, and if anything there, probably a little bit of sideways price action. Having a look at crude, moving and shaking last night. As you can see, there's quite a lot of volatility in the crude market, and I think you can safely say we've got a double bottom at the time being at $95 a barrel. Needs to break through that in order to see the trend continue. And I think the only way that could break through that at the moment is in fact we get more infantry builds, and of course Gaddafi gets taken out. And if that's the case, volatility towards the downside is the name in the game. And from whence it came, remember 17th of February when Gaddafi's situation started to evolve, crude was trading at $85 a barrel. So it just goes to say that if you take him out of the equation, put that 1.4 million barrels back onto the market, then in fact it should continue to go lower. Stay close to the technicals. If you are short, add on the position through that 94 level. Okay, copper also had a bit of a rebound, 396. We did see a draw in inventories in Shanghai, which suggested that people were actually coming back to the market. Quite a strong move from that low there, but time will tell on it, and I think that really we've got a little bit of a respite from these movements we've had, or negative movements we've had in the commodity space. Corn, wheat and soya, all interesting. Good rebound there in the corn market. And as you can see there, quite a solid rebound. Just have a look at this daily chart, and I think that's pretty getting close to the end of that correction for some time. So I would be encouraged by taking on some positions there. That and also soybeans. Everyone knows that I'm a perennial bull on these grains at the moment, just because I can't see them going too much lower, and I certainly have issues with subsoil moisture in Russia, Ukraine, and in China. Wheat came under a lot of pressure over the last couple of days. USDA report suggesting that we have too much grain there. Let's see how the plantings go. That's all I can say. And I think there's a little bit more persuasion there on what's actually happening on that front. Towards the local market, and look, it's been a mixed week. I think at the beginning of the week we said it was going to be supportive. Then we had a sell-off. We're coming back. I think that all indicates to me that exceptionally volatile for this market. And if you think that we've come all the way down, sometimes a little bit preemptive on our timing, but that's a reasonable close, I think. So, yeah, I think just stay pretty close to it and see what happens. But you know, it's a hard one. But if you put a gun against my head, where would I be? I think I'd prefer to be long at the moment. Okay, that's it. Big numbers tonight, so stay close to it. Yeah, I guess the key here for me is CPI and what's going to happen. And I think if anything there's the big number, CPI, 0.4%. A movement above that 0.4 should support gold and suggest that interest rates will be on the agenda again. And the year-on-year for the CPI, 3.1%. You know, I think it's, and I mentioned it a little while ago, I would love to see some inflation out of there, out of the US, because that tells me that something's happening. And to go from 2.7% to 3.1%, I think it's encouraging for economic concerns and economic lift. The question is, will it go too far? And I think that to me is the hard number. Okay, that's pretty much about it from me. Hope everyone has a great weekend. Happy trading, and continue to stay to the tweets for those trade ideas when we get them. Talk to you later, and bye for now.